Welcome back to Squawk Box. AMD issuing weaker than expected guidance after reporting an earnings beat despite deteriorating demand in its gaming business. Now, the company is forecasting more than $2 billion in sales for 2024, saying that's for its AI chip designed to compete with NVIDIA. But tightening U.S. regulations on AI chips sold to China could also be posing challenges. Chris Caso is a managing director covering semiconductors and semiconductor capital equipment at Wolfe Research. He joins us with his analysis of the AMD situation. But maybe we should just go broader with the whole industry, given that there's real questions about what China is or what the rules are going to be around China, Chris.
Right. Well, and maybe we'll start with AMD and use that as an example of what's happened in the overall industry. And AMD is a pretty good example of that because the correction in semiconductors started last fall. And some of those segments that corrected last fall, such as PC and data center servers, are starting to get better now in the second half. And AMD talked about that. But you also have some segments of the market, and in AMD's case, the former Xilinx business, which is a very broad business that covers things like communications and industrial, that's starting to weaken. And that's the reason why the numbers are coming down now. So there's a bit of a mix. But the probably most important thing for the stock today has been that they quantified their opportunity for artificial intelligence next year, and they talked about a $2 billion number, and that's from close to zero earlier this year, a very fast ramp. And of course, that's the secular thing that's growing as you go into next year, which is driving the space now. So as you look at the sector right now, if you could own one of these stocks, given where they are, given whatever you think value is, if there is value, given the multiples on these things, which one do you like? Well, AMD's been our top pick. And if you go back to last year, it was NVIDIA. And obviously that had a really good run. And, you know, we're a big believer in the AI trend going into next year. And for AMD, just being a smaller company, and we don't expect them to have the same position as NVIDIA, but it's a big impact for them. And the stock hasn't moved as much. I will say that NVIDIA has had to move back here, you know, partially due to what you spoke about and some of the fears about China. And, you know, we think it's an opportunity also for NVIDIA. We like that stock into the long term because right now, the China restrictions for NVIDIA aren't going to affect them in the near term because there's supply constraints. There's plenty of customers who want what they have. But longer term, you know, we just think AI is the biggest growth in semiconductors over a 5-year period. And we just don't think it's anywhere near to be done.
Chris, final question, because we had it on the screen. You probably can't see the screen. Intel. What's your take? Is this a turnaround story that could work?
It's tough to say. And we've been negative on Intel for a while. We remain so. And it's in the context of a cyclical recovery in semiconductors next year. The problem that Intel has is that they're spending a tremendous amount of money in Pat Gelsinger's plan to turn around the company. So whereas in most of the semis going into next year, we think we've got, you know, better margins, better cash flow and such, and Intel just doesn't have that because of the investment. The question for Intel, which is yet unanswered, is, you know, do they catch up to the rest of the industry, TSMC in particular, in 25 with this aggressive process roadmap? And more importantly, can they monetize that? We think that's a question that's still up for grabs.